Is Lumentum Holdings a buy or sell? And can it make you rich in less than 10 minutes? Let's find out together in this video. Lumentum Holdings. What's the business model behind it? Lumentum makes the optical components and lasers that allow huge amounts of data to travel through fiber optic networks. They design and manufacture the technology, then sell it to data centers, telecom companies, cloud providers, and industrial customers. Their business model is to invest in advanced photonics technology, produce high-performance networking components at scale, and earn revenue by supplying the critical hardware that powers AI, internet, cloud computing, and communication networks worldwide. How is the fundamentals of Lumentum holding? Lumentum's revenue declined from about $1.8 billion in 2023 to about $1.4 billion in 2024 because telecom customers cut spending and reduced inventory orders. This led to a significant loss. However, revenue later recovered to about $1.6 billion and then nearly $2.5 billion over the latest 12 months, while profit rebounded strongly due to rising demand from AI data centers and high-speed optical networking products. Overall, revenue is consistent. While net profit dropped from about $200 million in 2022 to losses of $130 million in 2023 and $547 million in 2024 due to weaker telecom demand and lower sales. However, profit rebounded to about $439 million over the latest 12 months, driven by strong demand from AI data centers and optical networking products. Lumentum's operating cash flow fell from about $460 million in 2022 to just $25 million in 2024 as demand weakened and profitability declined. However, cash generation recovered to about $126 million in 2025 and surged to about $452 million over the latest 12 months, reflecting stronger business performance and an AI-driven demand. While free cash flow declined from about $368 million in 2022 to negative $112 million in 2024 due to weaker sales and profitability. However, it improved significantly to negative $105 million in 2025 and turned positive at about $114 million over the latest 12 months, supported by stronger AI and data center demand. Lumentum's accounts receivable remained relatively stable, falling from about $262 million in 2022 to $195 million in 2024 as revenue weakened. In 2025, accounts receivable rose to about $250 million alongside recovering revenue, suggesting stronger customer demand and increased sales activity rather than collection issues. How's the financial ratio like? Return on equity of 33% shows strong profitability and is well above the preferred range. However, its return on invested capital of about 6% is below the ideal level, suggesting room for improvement in capital efficiency. Its debt level is low, with debt just over 1 times EBITDA, while a current ratio above 1 indicates the company can comfortably meet its short-term financial obligations with strong profitability and manageable debt. Who are the competitors? Lumentum holds approximately 18% of its addressable market, making it one of the leading players in optical networking. Its market share is slightly below Coherent's roughly 22% and Cisco Acacia's nearly 20%, while Broadcom holds around 10 to 15%. This strong market position reflects Lumentum's leadership in EML chips, optical transceivers, lasers, and photonic components used in AI, cloud, and telecom networks. Who buys from Lumentum? Lumentum's customers include some of the world's largest technology companies, such as NVIDIA, Google, Meta, Amazon, and Microsoft. Its primary customers are hyperscale cloud operators and telecom providers, which gives the company exposure to growing AI and cloud demand. However, its customer base is concentrated among a small number of large clients, creating some customer concentration risk if spending from major customers slows. Does Lumentum have a strong moat? Lumentum has a narrow competitive advantage built on its leadership in optical components for AI data centers, economies of scale, high switching costs, and strong technical expertise. Customers are reluctant to switch suppliers because redesigning and qualifying new components takes time and money. However, competition from companies like Coherent and Broadcom remains strong, meaning Lumentum has a solid position, but not a dominant monopoly. What is the intrinsic value then? Based on this DCF model, Lumentum's estimated intrinsic value is about $275 per share, while the current stock price is around $850. This suggests the stock is trading at a premium of more than 200% above its estimated fair value. However, DCF models are highly sensitive to growth and margin assumptions, so investors should treat this as one valuation estimate rather than a precise prediction. So, who are the competitors? Compared with Coherent, Broadcom, and Cisco, Lumentum is the smallest company by revenue and net income. However, its return on equity is among the strongest, showing efficient profit generation for shareholders. While its return on invested capital trails Broadcom, its balance sheet remains healthy. Lumentum also trades at a higher valuation than Broadcom and Cisco, reflecting investor expectations that demand for AI-related optical networking products will drive future growth. So, how is the stock performance like? Over the past year, Lumentum has significantly outperformed its peers, delivering a return of more than 800% compared with roughly 370% for Coherent, 80% for Cisco, and 64% for Broadcom. This strong performance reflects investor optimism surrounding AI infrastructure, growth in Lumentum's position as a key supplier of optical networking components used in AI data centers and cloud networks. Over the past 5 years, Lumentum has delivered a return of nearly 950%, outperforming Coherent and Cisco, but slightly trailing Broadcom's roughly 787% gain due to growing demand for AI infrastructure, cloud networking, and optical connectivity solutions. Despite periods of volatility, Lumentum has emerged as one of the strongest performers in the optical networking and AI supply chain sector. Since its IPO, Lumentum has generated a return of more than 4,400%, significantly outperforming Cisco and Coherent, though Broadcom has delivered an even stronger return of more than 3,100%. This long-term performance highlights Lumentum's ability to create substantial shareholder value through innovation in optical networking, communications infrastructure, and more recently, AI-driven data center demand. So, where and when to add the shares? Lumentum remains in a long-term uptrend despite recent weakness. The stock is trading above key support levels around $790, $640, and $540. RSI is near neutral, indicating balanced buying and selling pressure. As long as support holds, the broader trend remains bullish, though a break below support could lead to a deeper pullback. So, what is the catalyst and risk? Lumentum's growth could be driven by rising AI infrastructure spending, increasing demand for high-speed optical networking, deeper partnerships with hyperscalers, and expanding production capacity. However, risks include customer concentration, growing competition from Broadcom and Coherent, technological disruption, geopolitical tensions, and the possibility that AI spending slows. High valuation expectations could also lead to volatility if growth disappoints. Now, you'd be thinking, should I buy? My take is, Lumentum plays an important role in the AI ecosystem, but I'm not particularly attracted to the investment at current levels. The company has a relatively narrow moat, faces strong competition, and its financials are good rather than exceptional. After rallying more than 800%, much of the AI optimism appears priced into the stock, leaving limited margin of safety and a less attractive risk-to-reward profile. Thank you. Like and subscribe for more content, and always remember to compound your wealth.